Okay, so we're gonna go ahead and review the charts for the week of the June 23rd, 2025. We'll start with the COP report, and the news from this week was the Iran strike that was held up by President Trump and the Israeli government. The strike was aimed at the supposed nuclear stations that lived and resided in the Iran, and they were targeted to be just those sites and preemptive. But in the case of the potential reaction, there may be potential responses from the Iranian government. So we'll be probably looking at that mostly for this week. We have a lot of news that's coming in for this week, and we'll go ahead and kind of go through that. On Monday, we have PMI, existing home sales, and FOMC speaker speaking. Tuesday, we have Powell speaking, consumer confidence, and we have him speaking again on Wednesday as well in new homes. Then we have our big data for GDP, unemployment claims, and then we have our PCE data, which has been noted before that the Feds like to use this number. But I think this week will really, really hinder around what happens with the escalation of Iran and US and Israel. Uh, so even if we do get some reactions towards any of this economic news, I think the main thing will be how do we respond to what happens with regards to Iran, Israel. The COT report shows that we have neutral standings on the Dow futures. We didn't add on much last week, but we did increase based off of last week numbers to this week's numbers. So, and this is near a high. Same thing on Dow. We decreased. Oh, I'm sorry. On Nasdaq, we decreased on Nasdaq near these highs, and then on S&P, we increased on near these highs where you can see that a lot of the retail traders they decrease. But in this case, I'm thinking that this may be, if we look at previous time frame when this happened, where during this time we were near highs throughout this area, throughout this range. Let me see if I can just see. Throughout this range here, we had increasing and to flat, and we had mostly flat as price moved up as far as institutional buying. And then all of a sudden we reached this particular high, and then we saw a huge injection of buying by institutionals from a flat to a heavy position that was pushed above the zero mark almost, and eventually as we got into these lows. So I'm thinking that we are seeing something similar to this, where we see that this buying in this area here is actually buying to entice a sell-off, uh, to at least come down, uh, to take out some of these lows within here, and more specifically this gap that we have right around 54 to 50, 58 to 57 area, and this liquidity right around 58,500 area, 5850 area. So my thing with this is I'll be looking for sell-offs. This 5900 area looks good. 5850 area looks good, and then 5800 looks like really good targets overall for the daily. Similar in Q, we had a similar situation in Q, but in this case we're still kind of flat. So that means that there may still be a chance that we may get some more buying injected into the market. Let's look at that same time frame. Here's that same time frame around that similar behavior. We're flat throughout this range from this low to this high. And then you can see we get that spike around here. Then once we get that spike, we have the injection of liquidity to take out some particular high in that area, which in this case looks like these highs and even reached up into this high. And then we saw our sell off to the downside from this area until we set a low, until we set a low. And that looked like the same type of behavior that's happening here. And in this case, we've been kind of flat, start to see leveling off, get injection of buying, and then we get a sell off. So that's kind of what I'm going to be looking for overall. And then just like in ES, we have this particular low right around 21 475 area. We have this gap that may be traded back into right around 21 200 area. The low 21,000 flat, and then all the way down to 20,900. So we could see price push down into that range if we do start to see a sell off. And then Dow, same behavior. You can see it here. Low. There was continued buying throughout here, but the continued buying spikes at this high. So just the same similar behavior. Here's our low to high move. And then this would probably have been the high that we're looking to take out, and we traded back into an order block right here. We made our high on this week. We saw our spike in buying along this area, along this range. We saw our spike around here, and then we got the sell off all the way down, and then we see slowing until we pick a side, right? So each of the indices have that same flavor of price action going right now. Let's check out to see who we have reporting this week. Love following earnings, Whisper. Not a lot. FedEx, Nike, those are our biggest ones. Those line up with just general stocks. Not so we won't have a lot of big movers this week. Nothing that's gonna like really push and drive the market. So we don't necessarily have to check out a lot of what's going on with earnings reports. So that'll be a plus. Like I said, the biggest thing we'll be looking out for is the moves with the based off of the Iran situation. Let's go ahead and go to dollar and gold. So I'm a little neutral on dollar and gold. We'll start with dollar first. Dollar on the daily, we have responded to uh this uh high area here. And this was an area that I was actually looking at because of some short-term reasons. We didn't actually get into it, but we did sell off near it. And now right now, we do have a daily fair value gap on the upside, and then we have one on the downside that we've actually inverted. But I'm not really sure how we're going to hold because after that news about Iran, we may see some. We're kind of neutral right now because we could see that this takes out this low. I still think we may be coming down to this weekly order block. We set our low weekly order blocks right here at 97 217. So I'm still looking for us to come down here, and that would imply that gold would push higher. But Wouldn't be too surprised because we did take this low out last week and we started seeing buying after that. So I wouldn't, maybe we don't come down there yet, or maybe this is our low, but right now this is our yearly low. So um if we do hold inside of this range and push up above this high, which is this high from last week's high, um last week's high at 99, 157. Then I'll start to kind of see where we kind of want to go from there. But overall, I'm neutral to bearish on dollar. So I won't really be taking a probably won't be taking a lot of gold trades yet. But I do think gold will push up because this could kind of go sideways, and that'll give gold the room it needs to go up. So as far as gold goes, gold, I am looking for a buy. I like us to stay, we had that really, really big push to the downside last week. We have taken out several lows, previous day lows, and down into this previous day opening gap. And we're holding at the moment. We have a bullish fair value gap on the upside on like the 1 hour time frame. And then we got a lot of liquidity right below a fair value gap. And this is the premium range. So I think that we push to the upside. And if we don't, we could, which I don't have it on here. If we don't, I could see us dropping down to let me go ahead and mark it to take out the lows down to the monthly if we don't. But overall, I'm looking for one of these two to the upside where we hold inside of this fair value gap, push up above, take out the previous day high, and then we see price maybe even trade back down into it, and then start taking out some of this liquidity up into this fair value gap, and likely taking out this swing high here, and for at least a portion of the weekly move, and then we see this kind of decide whether or not we're going to go ahead and take out this high from the previous week. So that's dollar and gold. We'll go ahead and go to Dow. Let's go to Dow. Let's go to Dow. Dow, S&P, and Q all have a similar flavor, just doing this at a different range. So we opened a week up last week and with a new week opening gap. We set the high on Dow around the yearly opening price, and then we rejected it. And we start seeing price shoot down to take out the previous week low here. But we pretty much set an equal low. We had the news this past week about Iran strike that was on Friday. We haven't really got a reaction from that yet. That's where we are looking for anticipation. My anticipation is that we have at least an initial reaction to the downside. Um, we also had Powell news, and we had a holiday on Thursday, so we had Powell news on Wednesday, which I traded this rejection at 2 p.m. to the downside. Uh, not on Dow, but on ES, which I'll go over as well. And then we saw price hold into the premium of this week's. Um, we saw price hold below the yearly for most of the yearly opening price for most of the week. So I'm gonna be looking for how we react within this daily premium range, um, kill zone right here. And if we open up, I want to see us open up, maybe take the high, and then trade back into the range to continue to the downside. But if we just open up to the downside, I want to see us go ahead and take out this area as liquidity and try to use this fair value gap to push up, but eventually reject it to continue to the downside. And then this range of the new week opening gap, I want to see that get used as new supply zone, and then eventually trade down into an old previous week gap, which let's go ahead to the weekly. You can see what I'm talking about. The previous week gap that I want to see us trade down to is from Friday, May 9th to Monday, May 12th, which we already trade down. And this will get us, I'm looking at this to get us at least to the high and possibly to the midpoint. And the high is around 41,850 area. The middle is 41,500 area. So that is what I'm thinking that we will move into. You can see on the 4-hour chart, we have previous low as liquidity here and a previous week low, equal lows here. And that's also putting us right below the monthly to continue us down to this area. And we could even see this get taken out, but I don't want to look for that yet because I think we have some shorter targets that we can aim for to get us down there to where we're looking at. So let me just jump back to the 1 hour and then we can move on to Dow. Do move on to NAS. Similar situation. Let's go to the daily. Similar situation. We have previous week low here, and then we have a daily order fair value gap here near the monthly opening price. If we do continue to push lower, I do want to see us take out this low from last week and this week. Taking out the low from last week would push us to a range that I'm really looking at us pushing down to. This volume imbalance is what stands out to me. So that's right around 21,500 area, 500 area. That's really one of the main targets I'm looking at. And then of course, if we take out this, you can see we got equal lows here, right around 21,475. And if we continue to drop further, we have the daily fair value gap at 21,325 area and 21,200 area pretty much. That puts us into this order block, and not really sure if we go any further where we get down to 20,100 area, 20,725 area, that low, and we do even have a gap that we could come to, but not sure how far we see that go. But if we do, primary targets are previous week low here, here, and here, and then we can go down to the 4 hour, see how that lines up. See, we have the equal lows here. Let me extend this. You can see we have the equal lows here, which is definitely liquidity that we should probably be looking to grab. Then we have our monthly opening and yearly opening prices overlapping inside of this fair value gap. So those are very, very, very high probability areas. You see, we had a gap open between Thursday and Friday inside of the new week opening gap. So again, if we open to the upside, I want to see us stay below this premium price range and the 1 hour fair value gap, and reject to go lower, and then use this opening gap as new supply to push us on down to take out this liquidity and eventually get us into this daily fair value gap. Same thing on the 1 hour, is it's lining up the same way. We had our gap, we had our push up to the high to set our weekly high, started to respect. We traded into this fair value gap and held to push us lower. Then we had our Fed rate decision, which was to keep it the same, choppy a bit, but eventually we took out lows. And then that followed through on the short day on Thursday. And then Friday we had a spike up, which was the initial claim of Iran being hit by Israel. And we, initially thought that it would take the market continue down, but we actually held overnight, took out some highs, made another high, and then dropped just to come back to pretty much where we traded for most of the day. So I'm looking for the delayed reaction after the U.S. got involved into it and to push it slower, at least initially. So that's what I'll be looking for, Dow. And then finally on ES looking similar to the other indices. Again, from a daily perspective, we traded into the daily fair value gap to the downside. We set our previous week high here, right around 6108 area, and we set our weekly low around the 5960, 5970 area right here. I want to see us continue to the downside. I don't want to see us trade above this premium daily range right here. And you can see if we take out our low, 5970 area, we have the yearly opening price. We have another low around 5925 area. And then we have our monthly opening, and then we have our daily fair value gap, which that's where I want to see us trade down into worst case uh, for the up and coming week. 4 hour chart lining up. We had our pretty much equal lows here. Um, Previous week low, we had our gap, new week opening gap. And again, if we do see, let's go ahead and jump down to the 1 hour. If we do see that we are pushed to the downside immediately, I want to see us use this fair value gap that overlaps here and then invert it to the downside and then just continue lower and take out this low and then use the low we create from this range to take us down into the monthly opening and the daily fair value gap. If we push up, I don't want to see us above this uh, 1 hour order block. I mean, 1 hour fair value gap. And definitely if we come inside of this daily fair value gap, I want to see us hold it and then push down and use those older areas to go ahead and take us to the downside. So that's what I'll be looking for on ES. Overall, initially in the beginning of the week, I'll be looking for bearish moves. I can't say that that's going to be the continued trend because we could get some news to come out that would change the behavior of the market. Um, they could go ahead and de-escalate the actions that they've taken. There could be retaliations. There could also be a major response based off of the economic calendar. So I don't want to make any preconceived notions about it, but my highest probability is that we do get that to the downside and initially. So that's what I'm going to be looking for. The last final note is, we did have the Fed Chair Powell come out and say that, he still thinks that we're going to do two rate changes. At this point, with it being July coming up soon, I'm thinking that we get those rate changes around third quarter to entice buying for the fourth quarter. So that's kind of where I'm thinking that we go ahead and make that move. If you can see here, let me switch screens real quick. Um, you can see, that the Feds decided to keep the rate back at 4.25 and 4.25 to 4.5 range. If we do lower the interest rate, get it. I'm the estimated guess is that they move it down by 25 basis points to the 400 to 425 range. or 4.0 to 4.25 range. And that would, be the calm move, and that move would kind of just be a move that would suggest that they're being cautious with their decisions. So that's what I would probably assume that we would get. So that's going to be all for now. I just wanted to dictate this to make sure that I had all the notes for going into this week. I'll share this on my YouTube channel, and you guys can follow, like, and subscribe. Thanks.